But as far as the introduction, let's go ahead and do that real quick. Like I said, if y'all have any questions, go ahead and stop me because I can't see you. All right, cool. Let's go. My computer froze?
I don't think so, bro. No, I still got the first slide. You might have to.
It still hasn't changed?
No, sir.
Bruh.
Oh, yeah, it has. Yeah, about me.
Bro, I pressed that like 60 seconds ago. That's crazy. All right, cool. So about me, most of y'all already know me. You know, y'all, we see a lot of regular. Oh, I see why it's doing that. I never pressed the button. Okay, got it. I see a lot of the same familiar faces, so not gonna spend a lot of time here. One of the things I am proud of and I want to highlight real quick is the podcast. I'm a co-host of the Financial Flows podcast. We release every single Wednesday. We put that out about, I don't know, about 8 weeks ago, 8 or 9 weeks ago. So we're getting really good feedback. Please check us out. The Financial Flows podcast. We talk about everything from real estate to personal finance. It's me and one of my friends. He used to play for the Saints. He actually got a Super Bowl ring with the Saints, and he's from New Orleans. So he's the first ever person to win a Super Bowl ring for the place the actual place he grew up in. So like the proper city, not a suburb. So anyway, that's pretty cool. Y'all can check that out. Really good information. And then also, I put out 2 books. Well, I put out one February 28th, and I got another one that should be dropping this month. So I'm excited about that. And I got one more in me for the rest of the year I plan on doing. The third one's going to be something like, I don't have a title for it yet, but it's basically going to be like, if I could do it all over again at the age of 18, what would I do? And it's going to be like from a personal finance perspective. And I'm going to market that to like parents and like organizations. Like I'm a part of the 100 Black Men of Baton Rouge. And we buy like bulk orders of books every year for the students, for our mentees and stuff. So I'm gonna market it to that type of person. But anyway, Cousin Cells LA, if you want to connect, that's where to connect me. That's where to catch me at on Instagram. I'm most active there. I post every day, like every single day, no matter what. But that's where I'm most active at. If y'all want to connect, I'll answer your DMs or whatever. Just hit me up. So moving right along. So as far as risk management, so we have people from all different backgrounds in here. So let's set the tone. We need to define what is risk management. So I got on Google, and I looked it up. And according to Investopedia, it says risk management is the process of identification, analysis, and acceptance or mitigation of uncertainty in investment decisions. So it's just a long, drawn-out answer. Basically, according to me, it's just managing risk. Clearly what it says. Risk management is just managing risk, honestly. So today what I want to do is I want to go through 10 different risk management strategies that I do and that you should also consider. The first being thorough due diligence. So prior to investing, you have to conduct extensive due diligence. So what I'm talking about when I say due diligence, I'm saying you want to research the property's history. So you want to look at things like the last time it was purchased. Is it a flip? How much did they purchase it for? How long it's been on the market? Things like that. Also, you want to look at the market conditions. So is it a buyer's or a seller's market? That's going to give you options because let's say you find the current market condition is a buyer's market. Well, that just tells you that you have more negotiating room as opposed to the last 2.5 years or so, where basically sellers put their house on the market and they get an over ask price right away, multiple offers. So you want to know your market condition. And then you also want to look at the comps, the comparable sales. Is it worth what they're asking for? I could ask, like if I was listing the property, I could ask for whatever I want for the property. That doesn't mean it's worth it. I could put my house on the market for $1 million. I know it's not worth $1 million, but I could do that. It's my right to do that. So you definitely want to do your comps just to have an understanding of, what it's worth. Then you also want to look at the rental demand. So how much can you rent the property for? Is it in the area that'll rent relatively quickly? Things you need to think through as you're going through this. And then one thing I want to mention is that you don't always have to rely on the realtor for this information. Most of everything I just mentioned to you is on the internet, free of charge. So another thing you want to look for is you want to review those legal documents and assess the property's financials just to make an informed investment decision. Something I do want to point out is you don't want to rely on what the listing agent is saying. And you want to make sure that you get everything in writing. Give an example. I have a duplex on the market right now I'm the listing agent. I don't own it. I'm the listing agent. And when they put in the offer, they didn't ask us for rent rolls. They just took basically what I told them as far as how much the other unit was getting in rent. So they never, and we've been on the contract for like 3 weeks now. We closed this month, but they never verified anything I gave them. They just took my word that the rent was $750 and they didn't ask for rent rolls. And that's the tenant pay on time. They don't know that because they didn't ask that. So if you don't do that kind of due diligence, then you could be inheriting a problem, somebody else's problem. So that's something you want to consider and ask for when you're doing your due diligence. So the next thing I have here is diversification. So you want to consider diversifying to avoid being concentrated in one particular asset class or area, etc. For example, like you can diversify your real estate investments across different property types. So you may have some that's in most probably going to be in residential. Then you may have some in commercial, industrial, and that's what I mean by diversifying amongst real estate investments. Then also you could have one in different cities, multiple in different cities. Suburbs, you can have one in the city, one in the suburbs. Some of you may be interested in long distance investing. So you definitely want to diversify there. And then also you may have some that's rented out privately. You have a tenant in there that you get market rent from. Then you may also have some on Section 8. I have 3 on Section 8. And I tell you, like during COVID, a lot of people used to complain about the tenants not paying. Like the government continued to pay. I never had a problem with my Section 8 tenants paying me every single month on time, sometimes before the first. So like a day or two before the first, not a big amount, but still, it's something you should consider. Nothing's wrong with Section 8. You hear a lot of people talk negative on it, but I promise you nothing wrong with Section 8. You just got to screen your tenants effectively. And the reason I say diversification is because it spreads your risk and it reduces the impact of any single investment's performance on the overall portfolio. So let's say all of my properties are in one area, right? And in that one particular area, we had a hurricane that hit. Well, I'm probably going to be screwed. That's why you need to diversify. So like I have properties in different cities all around Louisiana. Like I'm all over. I'm diversified there. So I'm not concentrated in one particular area. Just think about if you had like all your rentals was in one particular town. Well, the whole town was dependent on one particular employer and that employer goes bankrupt. And you're probably going to be screwed because then your tenant's not going to be able to pay you. So that's just something to consider when I say diversification. All right, financial analysis will be next. So you want to perform a thorough financial analysis of the investment property. So you want to calculate the cash flow projections, including the rental income and expenses. And when I say expenses, I'm talking your principal and interest, your taxes, your insurance, your maintenance, and your vacancy. You definitely want to put all that in there, even if it's a new construction property. Like I got a new construction property. When I was doing my underwriting of my financial analysis, I still included maintenance and vacancy in there, specifically maintenance. And nothing has happened, knock on wood, since I've been owning it for 2.5 years now, but you still want to just throw it in there just to buffer your numbers because you want to incorporate like that buffer for unexpected costs. And something I always do when I'm running numbers, I always go with the worst case scenario on my numbers. Always. I want to go like whatever the highest interest rate I could possibly get, I'm gonna put that in there. Maintenance and vacancy, I'm probably gonna use a little higher percentage than normal. I just try to look at the worst case. And then if the numbers still work after putting the worst case scenario in, then it's a deal for me. So I'll give you another example. So on one of my, on a duplex I own recently in the last month, in the last 2.5 weeks, I was able to absorb my flood. Let me just tell you, my hazard insurance went from $2,300. It was time for renewal. It went from $2,300 a year to $5,100 a year. $2,300 to $5,100. That same property, flood insurance went from $788 a year to $2,300 a year. The crazy thing is, I'm still making money on this property, even though my insurance more than doubled on flood, and then actually more than doubled on both. I'm still making money because I had enough cushion in there. I'm still bringing in about $1,000 a month on this one particular property. So that's what I'm saying. You want to make sure you're doing your due diligence and your financial, your financial analysis and going for the worst case scenario. And if the numbers still work, you have a really good deal there. And then some of the websites that I use, I know y'all heard me talk about InvestZen before, but I don't know what's going on there. I try to log on the last couple of days and it keeps saying login failed. I try to reset my password and it won't work. So I'm not sure why that website not working. But one that old reliable is Bigger Pockets. Bigger Pockets have a calculator on there. If you're not a paid member, they allow you to use it for free 5 times. This is what I do. Let me show you an example real quick. A decision like that. And they're saying COC is just my cash on cash return. How much I put in the property versus how much I'm getting every year in cash flow. And there's a 15% return, which is good. My minimum I try to get is 12%. So like I said, if I took out the vacancy and maintenance, it'll be higher. So there's one property. All right. Remember, y'all can come off mute if y'all have questions as I'm going. This is the fourth thing. So adequate financing. And I notice a lot of investors mess up here. So you want to choose a financing structure that aligns with your investment goals and your risk tolerance. So as a purchaser, what you should do is evaluate your different financing options. So you have conventional loans, you have private loans, private financing. So that could be like hard money loans or private money, things like that. Then there's also partnerships, and you got to consider factors like your interest rate, loan terms, down payments, and potential refinancing options. So let's say you want to acquire an off-market deal or a wholesale deal, then you probably want to, evaluate. You're probably going to need quick funds, right? Like a hard money or private money to buy it. But then you want to have your financing lined up so you can refinance and, pay that hard money off. So just think about your financing as you're going into the deal. Most investors, they're probably going to go with that 30-year fixed loan, but I promise you that's not always the correct answer. For security purposes of knowing what your P&I payment is going to be, that's probably fine. But this isn't always the correct answer. It's just going to depend on you as the investor and your financial education. So like in a low interest rate environment and you predict the rates to go a little lower, then an ARM might be okay. You just have to basically have that financial knowledge and be able to assess all of your alternatives. So, and I want to point out that all lenders are not created equally. Repeat that again. All lenders are not created equally. So in my experience, with the big banks, the rates are going to be a little higher because they have staff to pay, they have marketing to pay for, and guess who, those fees are going to be passed on to? You, the borrower. So what I like to do is I like to go to brokers, because brokers, they take your credit profile and they shop it around to find a match. So basically, brokers are doing all the work for you, and they find the best deal for you and bring it to you. So that's just my preference. You go what works for you, but that's just my experience. I've noticed that the big banks charge more. Let's see. Either way, you basically just want to evaluate all your options prior to making that loan decision. And the law does allow you to shop lenders. The Consumer Financial Protection Bureau has a law that says from the first day your credit is pulled, and 44 days is a 45-day period. Thereafter is a window that allows you to shop different lenders, and they can all pull your credit, and it's all going to be treated on your credit report as one mortgage inquiry. So one thing I do want to note, though, you will lose a few points, like 2, maybe 3 points on your credit score. So if you are borderline, I wouldn't recommend going out there having everybody run your credit. But if you have great credit, you might want to shop, because you can also shop lenders against each other. Like you can get them to give you a loan estimate. Then you can take that loan estimate, go to the next lender and say, look, this is what XYZ is offering me. What can you do to beat it? And like I said, it's all treated as one mortgage inquiry. If you don't want to do all that work and have to apply for this one and apply for that one, apply to one and then go to the next one, tell them what your credit score is, tell them the specs of the loan, and try to get a loan estimate, and then present that to them and see if they can beat it, to save you some time from sitting there filling out an application, because it does take a while, unless you have all your documents handy, which I recommend you have anyway. All right, so the next one, for number 5. Oh, my bad. After all this time, I thought y'all were looking at the screen. There we go. All right, number 5, risk assessment. So this can be a part of your due diligence, but the whole purpose is just to identify and assess potential risks associated with that investment property. So things I want you to think about and consider are factors such as flood zones. That's big here in Louisiana. Zoning, so like residential, commercial, mixed use. And especially if you're buying from wholesalers, this becomes even more paramount if you're buying from a wholesaler, because you typically buying without an inspection or a limited inspection and not a lot of due diligence time. So definitely want to investigate that. And then also potential changes in like local ordinances or regulations that may affect the property's value or income potential. And one thing that comes to mind initially is like back in I don't know what year it was, 2021, 2022, 2020. Like all the investors were out there purchasing all those properties and trying to use them as short-term rentals. And then, what that does is that hurts the local residents because they don't have as much housing available to them to rent. So what government started doing, especially like I can name two offhand, like Atlanta, they cut down. They said basically it's limited. Like any one person can only own two short-term rentals. Period. That's all you can have is two. And then in New Orleans, particularly, there's been a huge issue. And like what the city government did, they just limited all rentals to one per each side of a block. So if I have a property, a short-term rental on one block, and the next door neighbor, or anybody on that side of the block also has one, well, now we got a problem. So what the city is doing is they limit it to one person, and that one person has to be like a homeowner, so they have to have a homestead on the property. Not only that, they're doing like some kind of lottery system where that's how they award the person that can have the short-term rental. It's just dumb. I mean, it's a process. So all I'm saying is just make sure you investigate and do your proper research so that doesn't happen to you, where you buying a property thinking you could do it short-term and then you come to find out you can't. Just imagine like all those people that purchased in Atlanta that had multiple short-term rentals. Well, or anywhere that enacted some kind of ordinance, New Orleans, shit. Just imagine like now they have to pivot to another strategy, either long-term or some other strategy, and then, possibly even have to sell. So that could really alter your investment decision. So definitely do your homework up front if you plan on doing that. I'm speaking on short-term rental, but this could be anything. Do your homework is all I'm trying to say. All right, number 6, professional advice. So what I want you to do here is just seek guidance from real estate professionals who have expertise in a specific market or the property type that you're considering. All right, so I am a realtor here, so I feel comfortable that I can say this. But when it comes to realtors, unfortunately, we are experts in the real estate area. Well, most of us are, but a lot of us don't even own rentals ourselves, and that's trash. So how can you get advice from something? How can you give advice as a realtor on something that you don't even do? So what I want you to do here, like I said earlier about lenders, same thing applies here. All real estate agents are not created equally. So you want to work with someone that is also an investor and works with other investors and has a track record. Ideally, both. But at the end of the day, you also want to leverage your agent for their connections that they use. So like they may have connections to people that can fix the properties. They may have connections to property managers, things like that. You want to leverage those connections if you don't already have those. And don't be afraid to hire. I'm talking about realtors right now, but I'm about to switch. Like, don't be afraid to hire attorneys, accountants, and property managers who can provide valuable insights. They can help navigate, possible legal complexities, and also assist in mitigating some risk. So just keep that in mind. Don't be afraid to hire professional advice. It's better to do it up front than to have to do it on the back end. Promise you that. Insurance. Let's talk about number 7. Insurance coverage. So what I've noticed as a realtor, even with my buyer clients, what I notice is they don't really understand this. They just go with whatever they're given. So as an investor, I'm highly recommending that you do your homework here and kind of understand what you're getting into, understand like if you're covered or not. So what I'm talking about today is just high level. You definitely want to go a little more detail, talk to your insurance agent, get more specifics, but you want to make sure you obtain the appropriate coverage for your investment property. So property insurance, it protects against damages from natural disasters, fire, vandalism, or theft, things like that. You'll usually see this on the insurance deck page, the insurance declaration page, in the dwelling coverage. And then there's also, you should have, as an investor, you should also have liability insurance. That's going to provide coverage in the case of injuries or accidents on the property. As a landlord, you must, I repeat, you must have this, and you must have an adequate amount. Now, when I say adequate amount, that's going to be based on you and your risk tolerance. So talk with your insurance agent, make sure you have adequate coverage. Some people have umbrella policies that, they cover everything, but you just want to do your homework, talk to your agent about that. But at the very at the very least, you must get a landlord policy. If you have rental properties, you must get a landlord policy. It's different from a traditional homeowner policy, totally different. So let's say what I notice is a lot of people, they buy a property. They may go the house hacking route where they buy a property, live in it for a year, then move out, rent that property out. All right, that's cool. That's a great strategy. However, the problem that I've seen is they forget that you have to change your homeowner's insurance to a landlord policy. So that's very, very important. Once you make that property a rental, you must change it to a rental policy, a landlord policy. Totally different. The cost is going to be a little bit more too because it's more risky, right? Because you're not living there. A tenant is. I always recommend, always require in my leases that the tenants get rental insurance. I got to be honest, I don't follow up with them to see if they do it, but I do require them to do it in my leases just because I let them know up front, my insurance only protects my property. My insurance does not protect anything they own. And I make sure they know that up front. And if they want to get the rental insurance, that's on them. It's cheap, like $10 a month, something like that. But I'm pretty sure a lot of people don't do it. But I don't even follow up to see if they get it. I just do what I need to do to protect myself because I want to protect myself. What I want to say is insurance companies are known for finding ways not to cover a claim. So don't give them one. If you move out that property, you make it an investment property, make sure you switch that policy. Otherwise, if you, let's say you didn't switch it and something happened and they find out it was a rental, they're probably going to deny your claim. They're going to find a way not to pay you. They always do. So let's see, landlord insurance, it also protects against rental income loss and covers potential legal costs related to tenant disputes or property damage. So one thing you need to look for in your policies is loss of use. You definitely want to have that coverage in the event the property is uninhabitable. Let's say the property floods and your tenant has to move out to a hotel or something like that. Then, the policy will help pay for that. That's called loss of use. So you definitely want to make sure you have that set up in your policy. But traditionally, all landlord policies will have it anyway, but you definitely want to go home and look at your declaration page just to verify. All right, cool. So the next one, number 8, what's up?
All right. So with the insurance, so say you house hacking, like you living in the main part of the house and you have a basement apartment, do you have a separate policy just for the basement, a landlord policy for the basement, and keep your homeowners for the rest of it? Like, how you split that up?
So I would talk to your insurance agent on that one. Honestly, they're going to be the best advisor on that one because I'm not 100% sure. I don't think you can have 2 separate policies on one property, one address.
Okay.
Yeah.
Thank you.
So I would talk to them and see how to make sure that they could best, make sure you're best covered. Talk to them and see what they recommend.
Okay.
But I'm 100% positive that there's a homeowner's policy and a landlord policy. It's 2 different policies. 100% sure. Yeah, I would say talk to the agent. That's what you're doing right now?
That's what I'm planning to do.
All right, yeah. Do that like soon before you actually start doing it.
Right.
And then look, if you don't mind, you'll come back and report back to the group because I want to know.
Yeah, whenever I get to that step, I'll definitely let y'all know.
All right, appreciate you.
Yeah.
All right, number 8, property inspection. So prior to purchase, you probably thought I would say this one first up at the front, but I didn't. But prior to purchasing the property, you must conduct a comprehensive inspection. So you want to hire a qualified professional. They're going to go in and assess the property's structural integrity, so the foundation, electrical and plumbing systems, the HVAC, and other potential issues. Down here in the Southeast Louisiana market, especially in New Orleans, I always recommend my clients and myself when I'm buying a property. I get a video pipe inspection. What that is the plumber comes in and they put a camera down the pipe. And basically they just make sure that everything's connected and that it's not clogged and that the sewage will flow from the house straight to the city connection. In New Orleans, we have a lot of issues down there with this. I had a listing last year where they did it, the buyer side did it, and they had 3 breaks underneath the slab. So it was an expensive fix, but my sellers fixed it. And to fix that is hard. Like they got to, dig a hole under they got to dig through the dirt, these tunnels and go in there to fix it. So you definitely want, I don't know, when y'all all over with the different markets, but you want to make sure you're doing that, or at least consider it. If it's not normal to do it in your market, that's okay. But I'm just letting you know about it. And then obviously the termite.
Yes, indeed.
What happened, Tracy?
I was just saying, yes, indeed. I've had those done every time in New Orleans, and they always find something with that camera.
That's good,
It
right?
could be it could be something as little as it's not leveled properly.
Yep.
Like it may be situated such that the water is, slowly running back towards the house, and you would never know that unless you do the camera.
Yep. They call it a belly in the line when it's like
Yeah.
we have drops, so they got like a little slope in the thing, so
Yeah.
it's not coming back. It's not going all the way to the city. Or they can have different kind of pipes, like the old, I think they call them terracotta piping, where basically
Yeah.
they rush from the inside. So it's basically making that hole or that circumference smaller and smaller. So it's harder to get stuff out.
Yep. Yeah.
So
Yeah. I had we done a lot of work one time, laid concrete. We had all new piping and stuff. Uh they ran, and this was when we were selling it. The seller had a inspection done, and they ran the camera and found out it had a belly in the line, and it was under the concrete. So that was on the plumber because he didn't do it properly. We had to break up all the concrete and dig it up, repair it.
money, sound like money.
Yep, for the
I
for
had
the plumber.
one of
Yeah.
my agents recently, he was on the buyer side. He had to cancel a deal because they did the inspection and it was like $23,000 worth of work that needed to be done under the slab. So they just went ahead and canceled altogether. Obviously, it's more expensive if it's on the slab because they got to bust up and go, well, they got to go underneath and tunnel through.
Yep.
So, yeah, just keep that in mind. But you want to basically obtain these just to get a detailed property condition report of the property because it'll help you identify like hidden problems and it enables you to negotiate repairs or adjust your investment decision accordingly. The next one would be, let's see, what number we on? Number 9, property management. Property management. So I'll tell you this, if you plan to invest in rental properties, consider hiring a professional property management company. I'm actually just recently fired one last day is this end of this month. So you want to make sure you hire a professional one because they can handle tenant screening, lease agreements, rent collection, property maintenance, and any of concerns that the tenants have. I've had 2 evictions last year, and the property manager did it both times. So you definitely want them on your team. I can't stress it enough, especially if it's long distance. You definitely want to have it. It's hard to manage yourself when you're not nowhere around, unless it's brand new construction and you won't have many issues. But you want to get a reliable one, keyword reliable. They're going to reduce the operational risk, ensure efficient upkeep of the property, and help maximize your rental income. They also track performance, like financial performance of the property. So if you don't and you want to track the performance of the property yourself, like the financial performance, I use Rental Hero, and I'll show you an example on the next slide, but that's what I use. That's the software I've been using since 2018. And it's like $95 a year, something like that. But it tracks all my properties. It's so easy to keep up with too. I'll show you an example, a screenshot. Usually with the property managers, you'll see they are charged like anywhere from 8 to 10% per month of the gross rent and late fees. The way I look at it, if you got a good one, then it's worth it, honestly. They also collect a percentage of the first month's rent for placing tenants in there. So that's something to keep in mind. I mentioned Rental Hero. Let me show you what mine looks like. Use it if you do want to consider it. This is my referral code. We both get a $10 credit, even if you only sign up for the free trial. And there's no credit card required either. So you can sign up, check it out. If you don't like it, no, you ain't gotta continue or give them your credit card or nothing. But that is my referral code 10116 if you want to check it out. And like I said, it's like $95 a year. All right, so last strategy. Save the best one for last, right? Exit strategy. Last but not least. All right, so no matter the property, you always want to develop a clear exit strategy before you invest in the property. So and that's even honestly, you could consider that with buying your home, your primary residence. So you always want to develop an exit strategy. I tell all my clients going into the deal, like my investor clients and my regular, primary residence clients, like you always want to have an exit strategy because you never know what can happen. What's Like if you're going into a situation, never mind, let me just get through this first. So you want to outline potential exit options such as like selling the property, refinancing it to access equity, or just holding it as a long-term investment. You know, that's my favorite, the buy and hold. Like I don't plan on selling really anything. My goal is to, you know, accumulate so many properties that I pass them down to my kids. And, you know, at that point, they decide what they want to do with it. Hopefully they keep it in the family. Just imagine having one property that's paying for your kids' education, like times and times over. So like that's my goal, is just keep it, let it keep appreciating. Let us keep making money every month on the cash flow and keep it moving like that. So, but anyway, you want to do this going into the deal, get the exit strategy. So something I definitely want to recommend you do is just regularly assess like the market conditions, the performance of the property. That's why it's important that you're tracking the performance of that property. Like something what is called what gets measured gets managed. So you definitely want to have that in writing, like writing it down, tracking your every single month, like tracking your property's performance. And then any changes in your investment goals that could determine the optimal time to exit or adapt the strategy. So key thing to remember is just that risk management is an ongoing process, and staying informed about the market conditions, adapting to changes, and continuously evaluating and adjusting those strategies are crucial for your long-term your long-term success in real estate. All right, and I believe, yeah, I was thinking about the next slide, resources. So just some of the things of value that I offer. On the left here, the Financial Flows podcast is free. We cover a variety of different personal finance and real estate topics, and it could be accessed on all of your major podcasting platforms. And then the book in the middle is I'm Out, Escaping the Rat Race, One Income Stream at a Time, is available on ebook and paperback. And then the third one is the one I just recently finished. It's in production right now to be printed, from listed to sold. As like I said, it's about to be printed. It'll be done in the next 2 weeks or so, and that'll be available as on ebook as well as paperback. And both of those you can get them on gotincomestreams.com. That's gotincomestreams.com. And last one, question and answer. Oh, we good on time too. Perfect. So let me take this off real quick. Perfect. Who got any questions? Come off mute. You can just come off mute. You ain't got to raise your hand. Questions, comments, anything?
I got a question.
Yep.
What made you get rid of? Oh, good evening, guys. Sorry to be rude. What made you get rid of your property manager?
Lack of communication and lack of marketing the property. We got a vacant unit right now, and just wasn't seeing them like do anything as far as getting it rented. No communication. Like no idea what's going on with the property. You know, it's been weeks, never heard from them. So it just, at that point, might as well take it over.
When you fired them, did you have somebody already in place, or did you just take it over yourself?
So it hasn't been official yet. It'll be official at the end of this month, but I'm taking it over myself. Cause I just feel like I could do a better job at this point. This is the second property manager this year. So 2 strikes. I might as well just keep it myself and just move. I know I could do better. So
How do you actually find your property manager? That's another question.
a good way to do it, honestly, is obviously you could Google and stuff, but the best way, in my opinion, is going to your local RIA, your local real estate investor association, and just networking with other investors, see who they use. And then once they get your referral, try to get some references for other people that use them, and do your Googles. As always, you can always do that. But that's what I would do. Get online, look on their Facebook and their Instagram, see what kind of marketing they do for properties. But that networking at the local RIAs would probably be the best way, in my opinion. Because think about it, the only people that's gonna be there is investors, and they probably have somebody that they're using. So I would recommend you do that. I think there's a just like the realtors are, for the most part, not every real estate agent is a member of the National Association of Realtors, but there's also something similar for the property managers. I can't think of the name of it right now, but there's a trade organization for them as well. So you can, if you went on that website, I'm sure you could find some like in your local market. Why are you looking for somebody? Damien?
I'm in a group, and we're looking for property out of state. And that's one of the key issues that we feel that'll be important for us.
Okay, so if you're looking out of state, then you can't go to local real estate association meetings. But what you could do is find a local one online and then message people within, like people that's a part of that group. Maybe they don't, try Bigger Pockets, try Facebook, things like that, and just start sending people messages. You may get somebody to respond to you. And Michelle, I saw something pop up. I think you asked me if I'm starting a property management company. No, hell no. I never want to do this for a living. It's too tedious with the laws and stuff. I got too much on my plate anyway. So I ain't doing it. And I see I haven't been able to keep up with the chat at all. So just if you don't mind, there you go. Thank you. National Property Management Association. Oh, that's easy. I need to remember that for next time. Thank you, Aaliyah. So that's the trade organization right there, National Property Management Association. Anybody had any other questions? They won't come off mute. Don't be scared. No stupid questions either.
What's going on, my brother?
What up, Dominique?
Pretty good. I got a question for the veterans on this call. My first property, I did a 20-year 5-to-1 arm, but I'm thinking on the second one doing a 30-year. And I'm just questioning what you guys mostly do, because I'm thinking about getting out of this 20-year, but it's a 5-to-1 arm. Just talking to different investors. Just want to get an inside sight on what you guys prefer.
Let me ask you a question, just for clarity purposes. So when you say 20-year, 5-1 arm, you're saying 20-year amortization for fixed rate for 5 years?
Yes, sir. We're fixed rate for 5 years. It's a 5.5 right now, but the interest rate don't went up. So after 5 years, I guess we're 2020, 7. How to go back? Yeah. So it's locked for 5 years right now, but 20-year amortization.
At 5.5?
Yeah.
Yeah, I wouldn't. And you about to redo it for a 30-year am?
No, my next one, what I'm working on now, the duplex I'm about done with now. I'm thinking about doing 30-year on that one.
Gotcha.
I'll just try to weigh my options.
Gotcha.
I
So
know 30 cash flow more, right?
correct. Yeah, that's all I'm about to explain to everybody that's listening. So basically, when we say amortization, y'all, that just means that the lender is amortizing that loan over 20 years. So his payment is going to be less, as opposed to amortizing it over 5 years, where his payment will be more. So 30 years will be, less payment, more cash flow. The problem is we have no idea what rates are going to be in 2027, right? So that's going to be based on you and your risk tolerance. Because what happens at the end of that 5 years? Do they just give you another 5 years at whatever the market rate is at the time, or what's the process?
Yeah, whatever the market rate at that time. Like I can go to another refinance out of that one, just whatever the market rate at that time on that one.
Yeah. I mean, honestly, I don't think rates are gonna be as high as they are now. Like, I don't think it's sustainable. Like, but who knows what's gonna happen in 2027? But if I was taking that risk, I would probably just do what you're doing and do the 30-year AM 5-1. I'm comfortable taking that kind of risk. Like some people on here may not. They may want, I'm locking in my principal and interest payment for 30 years and that's it. And that's okay. Like, do it whatever you're comfortable with.
Okay.
But in your case, man, I probably just do it. Honestly.
Yeah, kind of nervous about try to weigh my options on the next one. So.
Yep, makes sense. Mikhail said, thanks, Mikhail. Is there Michael or Mikhail? Is there a good website to find comps? So not that I'm aware of, man. Like, I know a lot of people try to use Zillow and things like that, and you can, but I got the cheat code because I got the MLS. But I mean, you can always just reach out to a realtor. You could try it on your own though, using Zillow and things like that. But yeah, I can't really offer any other ones. Anybody else know of any that can volunteer?
I will say that in some states, although I couldn't tell you exactly what states, there is a registry of sales. So look in your local state and see if there's a registry of sales. Here in the UK, there's a government website with all sales. And so everybody who sells a home has to register that. So that is the case in some states. I remember hearing it, but don't quote me. Just check. You never know.
Yeah, good point. And then hold on, Edward said, what's the best way to find out about the real estate meetings? That was you in Baton Rouge. So if you're talking about like the local real estate investor association meetings, they got 2 of them out here. One of them they do every 3rd Wednesday. It's actually perfect pivot point or transition. So my boy that's coming on here next week, he's the host of one of them. I believe it's the every 3rd Wednesday in Baton Rouge. They meet at the Vivint building right off LSU campus, the Vivint Alarm Company building. So they meet there, but he's gonna come on next week to talk about wholesaling. But all those meetings are free. And it's just a wealth of value, a wealth of information. You come learn and meet with other investors. But they have one in pretty much every major market. You could just type in whatever city you in and just put the letters REIA behind it, and it'll pull up. Let's see. Anybody else had any questions while I'm trying to scroll up on the chat?
Yeah, I'm gonna be out there for Essence Festival. Are they gonna have any meetings then?
Yeah, I have no idea. That's in New Orleans. I don't know. I'm located closer to Baton Rouge, but I'm not sure, man, to be honest with you. What you coming like on a weekend? Definitely don't have nothing on the weekend.
Yeah, till like Tuesday. I'll be there till Tuesday.
I know they got Google New Orleans REIA. I know they got one. I just don't know how often they meet. They got 2 actually. I don't know how often they meet though. It's usually once a month though.
Hello, everyone. My name is Robert.
Robert?
Thank you again for having this. I appreciate it. I'm on very sporadically, but so as an individual that's super green and I'm looking to get into real estate to do a buy and hold. So one for this to replace, kind of like Dan, to replace my 9 to 5, and I have like $20,000 in cash that I want to get into real estate investing. So, I mean, I have no idea really where to start as far as trying to find a property, making sure it's the right one, and then also individuals to help me kind of walk through the process.
Where you located?
I'm in Houston. I'm actually thinking I'm try to go on the real estate tour with I can't remember
Andre?
his name.
Andre.
Yeah, with Andre. Yeah, with Andre. But I just got to look at my work schedule to figure that out when I can do that.
Yeah,
That's where I think I'm gonna try to start there and then kind of go from there.
he'll be a good resource to tap in with for sure. But there's a lot of that's a great market to be in for this stuff. Like you get a lot of information out there from like they got groups. I'm sure they got more than one local real estate investor association out there. But you're in a big market. It's easy to network with other people. 20,000 probably won't get you much, but you can also partner with somebody. You can always partner.
Yeah, that's what I'm really looking to do is to partner with someone, one to help me walk through the process and understand. So you suggest starting with an investors club?
Yeah, look up, Google it, Houston REIA, and watch it.
It's in the chat. I put a link in the chat.
Oh, even better.
The New Orleans one's in there and the Houston one, and definitely go on that tour with Dre, because if for no other reason, then you're gonna find other people that are interested in investing, and other people that are either existing in an investing space or maybe even like you. So if you're looking for partnership, definitely go and tap in on that tour. Networking is key, especially when you're looking for partnerships.
Okay.
Yep.
Okay.
That's a
Thank
fact.
you all.
You're welcome. But that'll be good actually. Plug in with him. He'll get you connected. But don't be afraid to partner though. Like a lot of people be scared to partner. Nothing wrong with partnering at all, y'all. I'm telling you.
Definitely not. I'm about to open another limited company with a partnership to flip, so I agree with that 100%.
Yeah. Michelle, where you at? You normally have a question. Where you at? Well, you did put one in the chat.
I'm here. I'm just learning and paying attention.
What's your question for tonight?
I don't have a question for tonight, but I do have something I would share that would probably help. It just happened to somebody that I know. They went, especially for those wholesalers, they went and got a property under contract. And then when they went back out there, somebody else was rehabbing the house, found out that the people sold the house to 2 different people, and the other group closed on it first. So it was a mess. So, one of the things that I would suggest is, one thing that I learned in this process is if you get a contract with someone, that you can actually go to your county courthouse and file that contract so that whenever they do a title search, it will show up.
Right.
Most of us wouldn't do that, but that's the only way to protect yourself, because otherwise he just lost out on a great deal and somebody else got it.
Yeah, this shit is like the wild, wild west lately. I know in Southeast Louisiana, we've been having an issue where people have been forging documents. So they'll get a quick claim deed done and forge the document. So transferring ownership from one person to the next. And now they have something where we call them parishes down here instead of counties, but some of the parishes are coming out with what they call property alerts. So like you can, like this one is just one particular parish, but you can scan this and sign up for, whatever properties you own in this parish or county. And then anytime any type of transfer is happening or anything like that, you'll get notified. So you may not be able to stop it right away, but at least you'll catch it at the very beginning stages. So that's one thing that's been happening. I'm pretty sure it's happening all over, but it's definitely happening down here lately. And I just saw Andre sign on. Andre, you'll come off mute real quick. We were just talking about you. Well, I thought I saw him on here. I don't see him in the move.
Yeah. Oh, actually, let me have a look for him.
Yeah,
I think he might have just jumped in.
It came on and came off, but that's fine.
Cool, yeah.
Yeah, what else? Anybody else had any questions?
I got a question for maybe Tracy and Dan. Long distance investing. Mine are like 3 hours away. That's long distance. I'm talking about like multiple states over. Now, how do you guys find your contractors or someone you trust for long distance investing? You got boots on the ground in that state. How does that work?
If you don't mind, I'm 100% going to answer that question in some detail, but we got 4 minutes of Antonio's time before he has to go do his podcast. So anyone got any more questions for Antonio? Antonio, if you want to do anything before you sign off, and then I'm gonna answer your question for you, bro. 100%, I got answers for you.
Now I really got a 15-minute buffer. We're not recording to 7:50.
All right, cool. Let me just quickly say then, and I will try to be concise, which is totally against my nature. But the reality for me is twofold. Firstly, I have to know the place that I'm investing, regardless of whether I'm investing long distance. I have to go there. I have to get my kind of bearings, understand the location, drive around certain parts of it, look for the kind of places that look a little bit dangerous or ropey, not particularly great to invest in. Sometimes you can find deals there as well. So if you find places that are on the edge, like you start in one area that's quite nice and then suddenly you take a left and you're like, oh, okay. Those edges are really interesting because, that's where people are migrating to. That's where the opportunities are at. So the second thing is I want to get around the area and look for contractors. Most of the time I'll go around an area and I'll look for places that have had having work done, like scaffolding and stuff like that. And I'll look for the work vans and I'll write down the phone numbers of the people there. And I will either call them and find out what they're doing, or sometimes I'll just go speak to the homeowner and say, hey, you having your roof done? How is this contractor? How have they been? Because if you don't know the city, the things that you're going to need for flipping or for, doing things with your property in terms of renovation, you're going to need contractors. And then, as Antonio was saying about local homeowner real estate associations, I mean, we don't have those here in the UK, but in Spain, for example, where I do not speak Spanish, my Spanish is toddler level at best. And I'm going to be in Colombia in a week, and I don't know why my Spanish is so bad, but I don't have the language. So what I had to do there is I got a lawyer, and that was the first thing I did. The reason why I did that is because not only is that person going to be able to help me with the translation, but also they're going to be able to help me with the legality. And I actually hired two. I hired one to do my conveyancing and my buy-in, and I hired one to do the kind of clarification of my acceptable investment processes being a non-national. And what I had them do was check each other's work. So sometimes I would ask one guy a question, I already heard the answer from the other guy, and sometimes I'd ask the other guy the question, and that way I had them check each other's homework. I'd say, hey, by the way, is this the case? And I'd have the guys answer questions. So make sure you got the right people out of state, and make sure you go there. Like, this idea of buying a house sight unseen is just, in my opinion, fantasy. You have to go, you have to understand the road, you have to understand the streets, you have to understand the local amenities, because that's how you get hustled. People put stuff onto the market that isn't fit for sale, and they rely on people who haven't done proper due diligence. So that's my key. If you can get someone who's local, for example, if I went to buy something in like the Baton Rouge in the Louisiana area, you know who I'll be calling. His face is on the screen right now. I'll be calling him immediately. Like, bro, do you know this road? Do you know this area? Is it good to buy here? Should I buy here? Do you know this guy? So if you know someone in the local area, for sure, get that connect. But don't be under the impression you can buy out of state without doing a little bit of work. In fact, if anything, you're probably going to do a little bit more work. But if there's opportunities and deals to be had, then it's worth it. And I'll leave the rest to Tracy because she has property everywhere.
Good point. Good point.
I got a couple of few places.
Oh, coach is on. Yeah, coach too. Coach, you got any other opinions on that statement?
How you doing, Coach?
I'm blessed. How everybody doing? Everything he said was accurate. And then also building teams in those areas are built by referrals. If you meet other investors who utilize certain people, if they can give you referrals, that's always helpful. So it's just a matter of really, I like to build teams before I do anything, or have a team that I'm confident can get the work done, and be comfortable in working with them and that type of thing. But I still do occasional drop-ins when they don't know I'm coming.